The last few weeks, there are actually a lot of very interesting news stories coming out about oil and natural gas, including this one, as you can see in the center of your screen, how oil company CEOs here in the US are saying that $100 per barrel crude is bad. There's also a lot of other interesting stories about European blackouts, about how European Union natural gas imports are now 5 times the size of the amount of natural gas that was being imported from Russia into the European Union and Germany. And you're also starting to see interesting stories about how Mexico will stop exporting oil over the next couple years. So these stories are a microcosm of a much, much larger problem, and I've been talking about this for a while now, policy problems about energy. So you have central planners, you have politicians, bureaucrats, and regulators that are making enormous mistakes with energy policy. It is across the board. It's in oil, natural gas, nuclear power. There's misallocation of capital. There's bad rules and regulations in the European Union. Basically, it's almost impossible for a lot of oil and natural gas drilling. So for energy usage in the European Union to make electricity and for fuel demand, they have to import more and more and more. And that's why costs are so high. If you do not produce any energy in your own country, you have to import. And then you are at the mercy of whatever the importers are going to charge you. And oil prices have been rallying a lot lately. So remember how around Thanksgiving, you had the Biden administration coordinate with the 5 or 6 other governments. Who knows the exact amount of actual oil that was dumped from these 5 or 6 different governments, and maybe there was more than 5 or 6 governments. I don't think we'll ever know all the exact details about the amount of oil that was dumped from strategic petroleum reserves, but they managed to knock the oil price down for a little under 2 months. Now here we are almost 2 months later, and the oil price is back again in the low to mid 80s here in the United States. Gasoline prices were not really affected. Gasoline prices were still very, very high across the board here in the US in many states, even though the Biden administration, coordinating with these other governments, actually managed to knock the regular oil price back down. But the oil price, and I was talking about this in videos a couple months ago when I was talking about the oil price market manipulation that was being attempted, I knew the oil price was going to recover because they don't have unlimited amounts of actual oil to dump onto the market. Plus, the other major problem is that a lot of private sector oil companies here in the United States are not in a major rush to increase oil production. So these comments that are coming out from shale oil CEOs, and for patrons out there, if you've been a patron with me for at least the last 18 to 20 months, I was writing articles in early 2020, mid 2020, extensive articles about how uranium was cheap back then, about how natural gas and oil companies like EOG Resources were very, very cheap back then. EOG Resources and Chevron and Royal Dutch Shell were my 3 top picks for my patrons if you go back and look in the archives in 2020. By the way, EOG Resources, which is arguably the lowest cost producer and one of the most efficient oil and natural gas companies on the planet, they were one of the 5 best performing stocks in the S&P 500 for all of 2021. I believe they're up 90% in 2021 alone. That company is very super efficiently run with very low cost, very high profit margins, and they increase dividends. So they're a low cost producer. I remember getting a lot of complaints when I was writing articles about the prospects, the good prospects for EOG Resources in 2020. Well, look, here we are under 2 years later. The company is doing absolutely superbly, and oil prices are not at $100. Although with the natural gas rally, a lot of these companies are heavily benefiting from that as well, especially Chevron. Chevron is up a lot, mostly because of natural gas, I would say, although they are also a low-cost producer in oil. But Chevron's portfolio the last 5 or 10 years has skewed more towards natural gas. They've done a lot of natural gas and LNG acquisitions in the last 5 or 10 years. Same thing with Royal Dutch Shell. They've skewed a lot towards natural gas as well. But these comments about $100 per barrel crude oil being bad, in the article, they talk about how shareholders are not in favor of growing production right now. Shareholders want to focus on free cash flow, profit margins, and increasing dividends rather than growing production. The industry, the shale oil industry, did not do a good job from 2008 to 2019, and there was way too much capital available the amount of capital available, it was subsidized by pension funds, it was subsidized by private equity, it was subsidized by Wall Street investment banks and the Federal Reserve, and a lot of the shale oil and shale gas byproduct production growth that happened in the US, in North Dakota, in the Bakken, in Texas, and Oklahoma, the production was increased at a loss. And those days of that much capital available to grow production at enormous losses, to grow for growth's sake and waste that much natural gas, I would very seriously doubt that that's going to happen again. But as oil prices go to $100 a barrel or more, it starts to become a tax on the real economy and really, really hurt the real economy, especially here in the US, where we're not really used to high gasoline prices in many major states. If you live in California or some other states, obviously that's not the case because California keeps jacking up taxes every single year on gasoline prices. But in a lot of other states where that's not the case, you're not used to paying $3, $4, $5 a gallon gasoline like people are in California or in other countries where gasoline prices are much, much higher than in the United States. But oil at $100 per barrel or more, it starts to make a lot of these alternative energies, especially like advanced biofuels, green energy technology, the ESG, the corrupt ESG crowd, starts to be able to get more funds raised, starts to be able to get Congress to have more hearings with oil and gas company CEOs about why they're not allocating more capital to green energy, even though for the most part, except for government subsidies, it is enormous, enormous losses. So oil prices at these levels, the amount of production growth is not going to increase that much. Oil can stay in this trading range and not collapse the global economy, but if oil continues to go higher, say to $100, $120, $130 per barrel or higher, it will act as a tax and drastically hurt the global economy, similar to the Federal Reserve Bank hiking interest rates. So it will hurt consumer discretionary income. It will take away the discretionary income budgets for a lot more consumers here in the United States, the more oil and gasoline prices rise. And it will also make a lot of these corrupt and uneconomic green energy and ESG investments, the narrative will change that they are then economic. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 190, I think there's almost 200 now, articles and audio podcasts behind the paywall, including 8 new articles and audio podcasts out in the last 4 or 5 weeks, all for only $5 a month. I think is one of the best deals out there. And just in the last 26 or so weeks, there are now 39 new articles and audio podcasts. And again, that's only $5 a month. You're helping keep the YouTube channel going because I don't make any money from doing these free videos. I think I make a couple dollars a video for doing these free videos from YouTube and AdWords revenues. There's really no economic incentive to me making the free videos. So if I could wrap up this short little video very quickly, all of these different oil and natural gas news stories that are coming out, we're going to have much higher price floors for oil and natural gas in the next 3, 5, 10, 15, 20 years because, in my opinion, this is because of really, really bad policy from politicians, bureaucrats, regulators, central planners about energy. They politicized energy. We had for over a decade, we had all this investment that could have been made in uranium mining and nuclear power. We had it blocked. We have governments blocking smart investments, and instead wind, solar, ESG, advanced biofuels, all of these uneconomic forms of energy, billions of dollars of waste, fraud, corruption, and abuse is being tossed at these things that are uneconomic. And the tax policy, the rules, regulations, red tape tax policy for oil, natural gas, coal, nuclear power are all very, very difficult. Look at all the news stories and all the nuclear power plants. I think France just shut down even more nuclear power plants. It's a total mess. There's blackouts, there's shortages, and this is because we have people in power that will not acknowledge that we absolutely have to have natural gas, and we absolutely have to have nuclear power for baseload electricity generation. We have to have them. We have to invest in those more, and then we have to plan a transition over 10, 20, 30, 40 years, not banning all of these conventional forms of energy and saying, oh, we're just going to switch to ESG and everything's going to be fine, and then you can eat bugs or you can eat plant-based protein. But until that narrative changes, there's going to be higher and higher price floors in the years to come for uranium. There's going to be higher and higher price floors in the years to come for oil. And there's going to be higher and higher price floors in the years to come for natural gas. And I think the bull markets for uranium and natural gas are just starting, but politicians are playing lots and lots of games in the oil market. I would not be shocked if oil prices continue to rise. If Congress here in the United States tries to tax oil companies more, it will only create even more problems with supply. But unfortunately, all of the policy decisions regarding energy are heavily politicized. They are not smart, sound, rational, long-term economic decisions. They are heavily politicized. And that leads to waste, fraud, corruption, and abuse, bribes, unbidded contracts, and padding people's pockets here in DC and other major government capitals all over the globe. Because that's what the Davos crowd is good at: waste, fraud, corruption, and abuse.